Hi everyone, my name is Simon Mishevich from Optimize Accountants, and in this video I'm going to be talking about LLPs versus LTDs and any other acronym I can throw in as well. I'll do that. So let's have a look. We're going to be talking about limited liability partnerships versus a classic limited company tax structure. So an LLP gives you legal protection. That is the main purpose of an LLP. If something happens in your business, the liability stays with the LLP. You cannot be attacked from your personal savings unless you're a guarantor of some sort. A limited company has the same legal protection. So an LLP versus LTD, no change from a legal perspective. You are pretty much covered, provided that you've not signed anything off personally. So where are the differences? Well, an LLP is based on members. So the profits from the LLP, Limited Liability Partnership, will be put onto your personal self-assessment tax return, which means you are going to be subject to income tax on the profits that you have made. And again, it will be your share of the profits, not the entirety of the LLP itself. A limited company, however, is subject to corporation tax. So as it stated before, a limited company is its own separate legal entity and therefore has its own legal tax responsibilities. So I'm hoping that's covered itself off. From a legal perspective, no real change. From a tax perspective, an LLP, you are going to be taxed as an individual on income tax versus a company that is taxed at corporation tax rates. Use of LLP versus LTD. I'm going to talk about taxation now. We've done to death the legal aspect. So let's have a look at LLPs versus limited companies. And as I mentioned, LLPs is based on income tax, so your income tax rates. So band 1 is anything below 12,570. If this is all your income that you've got, by the way, if you've got other forms of income, I'm not going to even consider that. That is something that you'll need to speak to your accountant about. But I'm going to focus on just those individuals who are running an LLP and nothing else. So 12,570 would be tax-free. If you've got a limited company, you don't get a personal allowance, so everything will be taxed. So between £1 and 50,000, it will be taxed on the company at 19% corporation tax rate. Band 2, there isn't a band 2 for limited companies. It will remain as 19%. Up to £50,000. We'll talk about the third band rate when it does affect companies. But band 2 is primarily focusing on individuals, again using LLPs. So anything between 12,571, I should say, to 50,270 will be subject to 20% income tax. And then here comes the third band, 5271 versus 125,140 is subject to 40% tax. In a company, if you have got profits between £50,000 and £1 to £250,000, then that will be subject to 26.5%. And now that feels really strange because people think it's 19% or 25%, but you do have this weird calculation to do, and it does give you an effective tax rate of 26.5%. I have done other videos to explain that, so feel free to go to our channel and find those videos out. Finally, you got a band 4. Band 4 is for anyone who's an additional rate taxpayer. 125,141 will pay income tax at 45%. And then for limited companies, that is £250,000, and then you are subject to 25% corporation tax. So here you might say, well, where am I best to use a limited company? I still maintain if you've got profits of £50,000, then using an LLP more than a limited company does make sense. But if you're looking to grow significantly over and above that 50,000, then a limited company may be better for you. But again, it really does matter to take the time with your accountant and do some proper planning. That's not all actually for LPs. There are other taxes. So you've got national insurance for trade businesses. Again, if you're not sure what that is, speak to your accountant. In addition to the class 2, we have a class 4 rate as well for 6%, for anything between 12,571 to 50,270, and you got then an additional rate of 2%, not a 2%, it replaces 6% rate for any profits in excess of the 50,271. So just to restate, it's 6% or a 2%. It's not an 8% rate. The 6% actually was 8%, but it's been reduced, so that's a good piece of news for all businesses. But you do need to think about LLPs are subject to both income tax and national insurance if you're a trade business. Again, do get some advice from your accountant if you're not sure what that really means. So let's just go into a bit more detail about when not to use them. So we're going to look at an LLP now versus LTD, £50,000 worth of profits. And what you'll notice that income tax is 7486 because it's 20% over 12,570, which is your personal allowance. In the limited company, it's subject to 19%. And then what we've got to look at is national insurance as well. So national insurance on LLP is an additional, so you've got 6% here, of £2,425. And then the total tax of that LLP on your income tax level, don't forget, is 9,911 versus 9,500. You might think, well, why are you telling us not to use a limited company? Well, there's a couple of the reasons for that, and I'm going to share this on my screen. Remember that income tax when taking out money of a limited company. I'm talking about dividends here. So you've got profit of 40,500, which is profit after tax, of course. Personal allowance of 12,470 then gives you taxable dividends. If you're taking all the money out of the company, that is 27,930. Income tax on those dividends is going to be circa 2,443 plus your corporation tax. That gives you a total tax rate now of 11,943, and you've got further additional tax accountancy fees as well. So add on maybe 1,000 for that. So really, you're looking at about £13,000 of taxation and accountancy fees of running a limited company, which is quite high compared to 9,911 now, isn't it? So that is probably something I would say. If your income levels is not going to be greatly higher than £50,000, then I would still use a limited liability partnership or an LLP.